over the past few months, I've been making videos on some interesting investment opportunities in the blockchain space with altcoin projects. We've talked about decentralized finance altcoins, low cap altcoins. This month, it's kind of a mixture of my 7 picks. And with these things, or with really any investment advice, you have to understand you have to tailor your own individual investment strategy or investment framework. So today, I'm really going to discuss how you can kind of build a thesis, have a narrative built on top of that, and then really build your own framework and set of rules. Because again, one thing going into this is you really have to begin with the end in mind. So a lot of people go into this and go, okay, there's the 60-40 rule or the 80-10-10 or the, like kind of all these different portfolio management strategies. And first of all, you just want to go, okay, let me take this kind of black and white thinking away. Let me take this binary way of thinking away and really go, let's build a strategy that works for me. Because if somebody's telling you, oh, the 60-40 is the best portfolio strategy, well, what are they optimizing for? They might not want the same thing that you want. They might not be looking at the same thing that you want to do. Maybe you're I don't know, maybe you're 16 and you're looking to invest. Maybe you're 25 and looking to invest. Maybe you're 40. It all depends on what you're optimizing for. So if you're optimizing for long-term steady gains with low risk management, that's one style. If you're looking for, you're making a lot of money, let's say a lot of our viewers are in online business. I run some e-commerce businesses and they have nice cash flow income and they're going, okay, I'm gonna take a percentage of this and put it into maybe a little bit more high risk, high reward, things like altcoins, which since we're in this crypto bull run, it's pretty nice opportunity. That's what I've been covering. Our first month, just one of our picks in the first month did around a 20x on Binance Smart Chain. So go check that series out if you want to see what happened there. And it's still sitting around like $19, so 19x from when I first started talking about it, around $1. So basically what you want to understand is first the investment thesis. So when you're thinking about an investment thesis, you have to go, okay, how is a thesis going to play out? Because yes, you can form your own opinion on this, but you really have to remove this idea that most people go about investing with, which is, oh, Tesla's going to go up, or Apple's going to go up, or Amazon's going to go up, or Bitcoin's going to go up. This is black and white. We talked about removing this binary thinking. That's kind of step one, if you will. But this idea that things are going to go up because you think that they're going to go up, or somebody else says they're going to go up, it's just remove that. Please remove that. You have to really think. You have to think multiple steps ahead. So it's like playing chess. Okay, so your thesis in chess, let's say you have an opening move. Let's say you're thinking one move deep. You're going to move this pawn here. That's like thinking this thing is going to go up because you're just thinking one step forward. What you want to do is at least think 4 to 5 steps forward. So thinking, for example, your thesis currently could be on, I've talked a lot about this, with electric vehicles. Yes, investing in companies like Tesla, Nikola, NIO, people love doing that. People talk about that all the time. That's like crazy hyped up. So some people would go, this is going to go up, so invest in it. That's binary, that's black and white. Is it going to go up, is it going to go down? Rather, what you could think of, I'm interested in, is things like commodities. So that's another step. So what are the essential infrastructure to build electric vehicles? So what does each vehicle need? Well, they need a battery, correct? All electric vehicles need EV batteries. Now, okay, so that's one thing. How can I invest in the infrastructure for those batteries? Well, the commodities that underline that. So lithium, nickel, copper, cobalt, these things are main ingredients in here for all of them, no matter what company makes it. So it doesn't matter which horse is going to win the race. It's like looking at all the horses and going, hey, I'm going to own whatever that horse is wearing. So, you go to a racetrack and you're going, I'm going to bet on that. Your friend's going, I'm going to bet on that horse. And you're thinking, no, I'm not going to bet on that horse. I'm going to look at what each horse is wearing and bet on that. That's kind of like how, obviously, it's just like one way of thinking about it. It's an interesting analogy to go, instead of just pointing at one team, what are all the teams using, basically? So it's like, instead of picking one company, what do all the companies need? And to build these electric vehicles, plus on top of that, you have an additional benefit because 5G needs a lot of these essential commodities. So now you're thinking at least 3 steps deep. Now let's go one step further, and then I'll move on from here. But it's important to understand how you need to build this because it's like building a moat around your investment thesis. So one step further of the commodities is the commodity producers. So what are the companies that are producing lithium, nickel, cobalt, copper? Boom, there you got it. Now you're at least 4 steps deep. You can go a little bit deeper than that. But like junior miners and like mass producers, you can kind of diversify into the mining stocks there. But this is essentially how you want to think about. That's part of a tiered investment strategy. So think multiple steps deep first off. in your investment thesis. And part of that is that's called the narrative. So in your investment thesis, that is the narrative. So another narrative could be we're seeing an increase, obviously, in e-commerce. So what are you going to invest in? Are you just going to invest in something like Shopify? Are you going to invest in Amazon? Are you going to invest in eBay, PayPal? Well, think multiple steps deep, and you can kind of see that play out. I'm not going to dig into that one necessarily, but there's so many out there that we could discuss, and I'm happy to make videos on other ones. But that's kind of the beginning. Begin with the end in mind. So you have to identify the end game goal of your narrative and your thesis should be thinking multiple steps deep, so you have a moat around yourself, because anybody can just come in and go, I'm going to buy Amazon, I'm going to buy Tesla, I'm going to buy eBay as a stock. Anybody can do that. Download Robinhood, the Robinhood generation, go on. They don't have brokerage account. They don't have, they don't understand how these things work. They just go on Robinhood, boom, buy. They can even buy fractional shares and things like Cash App. But anyways, so beyond this, so you have the thesis. You want to test this against an antithesis. So one of the most important things, in my opinion, is seeking out the other side's argument. So, a great quote, I can't remember exactly who said it, but the best way to argue your side of the argument is to be able to argue the better side better than they can. So seek out disconfirming evidence. See, as much as you can. Do not just surround yourself in this echo chamber or confirmation bias. For example, if you're a cryptocurrency investor, I highly, highly recommend listen to Peter Schiff. Seriously. Listen to Peter Schiff. Go listen to a couple of his podcasts, listen to his interviews, listen to people that are against cryptocurrency instead of just remaining in this echo chamber of crypto's only going to go up. This is something that kills me when I see people say this. I invest in it because I think it's going to go up. It's like, man, you need to take a step back, read some books. This is a great book. I just recorded a video on the North Macedonia Citizenship by Investment Program, but the Greeks, going back to more Stone Age style economics and classical economics, because it's really the lessons of history. So many people, tulip bulbs are going to go up. Beads, like the African bead trade, which were used as currency for a long time. Beads. There's so many out there. Pets.com, it's going to go up. That's what I'm going to invest in it. So again, it's just removing this kind of ideology, and again, seeking out disconfirming evidence. That is so important. If you can, especially it's better if you can meet up with someone and talk in person that does not agree with your opinion. So in really digging into that, not just getting mad at them, having a genuine discussion. The problem is a lot of people go from discussion to argument, 0 to 100 real quick. It's because of, in my opinion, the news media. It's like, look at the presidential debates in the US. They don't discuss, they straight argue. And there's a fine line between discussing and arguing. And it's not like slowly going from discussion, like civilized discussion, to arguing. It's going from discussion to argument. And the main thing here is again, that's black and white thinking. That's binary thinking. To start this off, I literally said, remove that. So remove that. Most things, you want to find the balanced approach. And that's why in this, seeking out disconfirming evidence, so you have your thesis, you want to match it with an antithesis, combine those together, and you form the synthesis. So that synthesis is the new thesis. And this is an ongoing cycle. It's called natural law. It's actually something that the ancient Greek philosophers started, and it still holds true today. Thesis, antithesis, synthesis. And it's an ongoing kind of experimental cycle. So my recommendation to start this off is try and think of a new thesis, investment thesis, once a month. Start off with that. Seek out disconfirming evidence. Look, if you don't have anyone to discuss with in person, search online. There's tons of great resources online. Go to YouTube University and really seek out the people that are against what you're thinking about. If you're thinking about maybe pot stocks, maybe marijuana stocks, look at people that are going, hey, this is not going to work out. And really, that's the antithesis. It's really this idea where you have to remove your own personal bias. You have to step the ego of like, I know best. Cryptocurrency is only going to go up. Remove that. I'm telling you, throughout history, that has never worked. The lessons of history kind of show these things. And a lot of people think that they're, I'm way ahead of the game because I know about, the blockchain industry or whatever industry. It doesn't matter. Think like a fifth grader. Think like, okay, I want to, seek out things that are curious. Like, be curious about how the other side is looking at things and be able to modulate between, my thesis and this antithesis. So, very important to understand all of this. Kind of along with these things is the tiered investment approach. So I've talked about this with these altcoins. Essentially, in my opinion, a great way to remove this binary way of viewing things of I'm going to buy Ethereum, or I'm going to buy Chainlink, or I'm going to buy Bitcoin at this point in time, and I'm going to sell it at that point in time. Or when I make these monthly pick videos, or you see other people making these, the best picks for April. it's not, at least for me, maybe these other people are saying this, it's never, when you watch a video like this, at least on my channel, I can't speak for everybody, it's never to buy at the beginning of April and sell at the end of April. That is the worst way to invest. That is, by definition, black and white, binary thinking. So the best way to do this is average in, because you have to expect volatility. First of all, you have to analyze your own personal risk factors. So are you looking for low risk opportunities? Well, I would recommend more things like maybe you could look at more in the stock market, more in the real estate market. There's things like bonds, ETFs is great, mutual funds, all these different things are great if you're very low risk. But you should have kind of a tiered investment approach. You shouldn't have all low risk or all high risk. You should pull, and at least the way that I do it is I pull profits from the low risk, and a percentage of those profits I pull profits from high risk things like cryptocurrency, and I put it into things like low risk. So a great way to do this is kind of setting out your own individual plan. And again, I can't tell you a cut and dry plan that you're going to implement. You have to go out and form your own thesis, but I can give you basically a framework behind this. So let's say you're putting $1,000 into a new cryptocurrency, a new altcoin, and that altcoin does, let's say, a 50% gain, which we can see daily. So maybe think about, okay, going into it, think about, let me apply the little old lady strategy. So when my coin doubles, I'm going to de-risk, pull out your initial investment. Now, it all depends how you want to do this, because that's kind of a binary way of thinking. That's why in my video that I've had in the description of pretty much every video on this channel about how to pull profits with altcoins, when I talk about DaVinci J15's, DaVinci Jeremy, his little old lady strategy, it's great, by the way. I love the strategy. But it is basically, de-risk, pull out that initial investment. And that's great to do. But it all depends on, do you believe in the fundamentals? So have you done your research? Have you DYOR? Do your own research. I have that video as well, linked down below every video. Have you looked at the fundamental analysis, the technical analysis, the sentimental analysis, and then also the on-chain analysis? And I'll be doing an updated video of those pretty soon here. I'll be leaving Istanbul here in a couple of days, and I think probably when I'm in Bodrum, I'll do a video on those, updating them. But essentially, the point here is this tiered investment approach. It's not black and white. You want to form your own strategy. So set out the rules, set out the framework. How are you gonna do this, and stick with it? That is the most important thing. So if you're investing in something new, you should have a thesis, you should have an ongoing narrative with that. And with this, you should have this kind of framework or set of rules around it. So you should go, no matter what, I'm gonna remove my emotions out of this, and I'm gonna think rationally. I'm gonna have a logical plan going into this. That way you're not caught with, your pants down and it dumps down. This is why things like having a proper stop loss in place if you're trading on leverage, having conditional orders set, using limit orders instead of market orders are so important in my opinion. Those three things to trading is key. Conditional orders, so you can really remove your emotion and just have a set plan. And you can use, when you're looking at technical analysis, you can use things like the Fibonacci extension tool or Fibonacci retracements and look for key price levels to kind of average out of something, or you can average into something. So this is really what it comes down to, is back to that $1,000 part. Let's say you put that $1,000 in, it turns into $2,000, you de-risk, take out $1,000. Now with that $1,000, what do you do with it? This is where it gets interesting, because this is where it gets much more nuanced. So you could go, okay, I'm gonna put maybe 25%, so $250 into a low risk asset category. So let's say you wanna buy, an ETF or mutual fund, boom, pop it in there, $250. That you're holding long term. Let's say the other 500 you want to put on the side, looking for a dip maybe in this altcoin. So maybe if it dips further, you can toss half of that $500 in. So I always recommend never going 100%, always doing some percentage. So, and it depends how hands-on I guess you are with this. So you could do, just instead of 100%, you could break things up into 50-50, or you could go 25-25-50, or you could go 25-25-25, or so you can literally break this down infinitely. So if you're much more in-depth, I would say, kind of what I do is I look at things I like to think in chunks of 10. So 10%, right? So if something doubles or something does a 50% gain, I'd probably pull out 10%. Have that sitting in a stable coin, look for opportunities in something else I want to put that into. And over time, I am basically de-risking. So I'm not doing de-risking 100%. And that's why I agree with the little old lady strategy. But again, just for my personal risk tolerance, and the money that I put in is cash flow. It's not money that I need every day. So that's one thing, obviously, with any investment, you should never risk anything more than you're willing to lose, because especially in this market, it can go to zero. It is not a zero chance. It's a non-zero chance. So that's pretty much it for this video. Maybe I can do a part 2 on this one, but I didn't want to make it too long. Just basically remembering this, that thesis, antithesis, synthesis is so important, really having that tiered investment strategy. So breaking things down into chunks that suit your personal strategy. It all depends on how hands-on you are, and that's why I can't give you a cut and dry approach. I can make a video on my personal approach, just going in depth with that, but I don't think you should copy this. That's why I kind of shy away from doing things like revealing my portfolio or revealing how I personally invest, because you should form your own thesis. You have to begin with the end in mind. It's all really depending on what you're optimizing for. And that's it for today's video. So if you like this one, leave me a comment down below what you thought about it, what you want to see moving forward, any video ideas, and yeah, definitely like this video if you enjoyed it. Hit the subscribe button, notification bell to stay up to date with our time-sensitive content. As always, invest global, and until next time.